I'll be joining Ambrose Omordion right now, who will be helping us to understand the latest trending issue around the MPC meeting of CBN coming up in July 2025. Just 3 days away from now, on Monday 21st and Tuesday 22nd, CBN MPC meeting will be meeting and they'll be deciding on what will be the next exchange rate, talking about interest rate and other MPC rates in Nigeria. Let's join Omordion right now so that he can help us to understand the impact of this decision on Nigerian stock market. A very good day to you, Ambrose.
Yeah, good afternoon. Thanks for having me.
Thanks also for always joining us as usual. So let's get down to the discussion. There are feelings. I don't know whether you are part of those people in Nigerian stock market who are doing wait and see on the MPC meeting. So take us through. What are you guys doing? Are you also part of the wait and see group?
Anywhere in the world, economic event like MPC meeting is very, very important for investors. When it comes to making an investment decision, I'm not surprised that you said wait and see. It's expected that both traders and investors want to know the direction of this economic team is going to kind of give the next direction in terms of rate cut or rate hike or rate on change. Why is it very important for MPC meeting? In any economy, we have two types of policy that drive fiscal and monetary policy. And monetary policy is to look at economic performance. In some climate, it's just 1 month, they mean some 2 months, they mean to see if the last policy decision they make, if it's reflecting or what is other indicators in the economy are also saying for them to adjust rate up or down. That is why they need regularly to kind of drive the economic direction so that investors or the economy itself will have a direction. That is why the meeting of MPC meeting anywhere anymore, central banks are meeting for this kind of decision. It's very, very important because what we call circular flow of funds. When there is rate hike, they like to be fund leaving the equity market toward to where there is safer, we call it a risk-free instrument where fund going there. But also when there is kind of cut, also investors also want to keep my money there where I'm not seeing anything. They want to take calculated risk in moving from that where they are, either they choose to come or treasury bill to move to equity. That is why all eyes are on this meeting coming next week, Monday and Tuesday. For me, we have seen a lot of activity in terms of macroeconomic data coming out to give indication what we should expect. We'll start from what is happening globally. We look at most of the recent data that came out from the economy. We are seeing that the inflation is already taking a public direction again in those economies because of what the tariff impact or fear of tariff, we want to call it. And our economy has kind of isolated itself since all this Trump regime started. We are seeing that our market is doing well. Our raising of our inflation figure, coming out also set to rebate our GDP. All these are telling us that our economy is changing. We need to factor in some new development in the economy or new sector that is coming with another one activity or the other so that we'll have a robust data to guide our decision. Even when Nigeria here, the kind of the National Bureau of Statistics is not consistent in using this data to guide investors. But looking at some data that are very, very important can guide. For example, at this already we are almost the first month in third quarter. We have not seen GDP figure for first quarter and for second quarter. But for those that understand that when we look at the corporate earnings that come from companies, we give an insight to what has happened in the economy for that quarter. That is why I say every investor should understand how to kind of combine economic data and corporate numbers to make informed decisions. We have not seen GDP figure, but we have seen that in first quarter, companies on the exchange, nearly all the sectors that are representing the economy will see their positive number, giving us that we're to see a positive GDP for Q1. Also, all eyes are still on Q2 numbers for these companies in this month of July, and that's the month we're seeing another MPC meeting. As we speak now, no GDP to guide us well. We're only depending on 2024 GDP, while the last quarter for 2024 we had about 3.8% GDP, and the full year was about 3.6 or 3.4. For that, there's no consistent data for us to vote because we, investors or analysts in the market, understand how to use other way of kind of getting the economy. We can know where they are going. Another one is that the inflation figure. We have seen for the past 3 months now, inflation is declining, which before now, the essence of rate hike by monetary policy anywhere in the world is to checkmate inflation. Now that last year, 2024, we have seen throughout the year hike, what experience or what we had. Now that we are seeing after the rebates, we only saw inflation, ticking up only once. Since then, we are seeing declining. And also, we're seeing that the policymakers for the MPC meeting or the committee, in their own wisdom, in the first what they had in February, they left it unchanged. The one they did in May, they left it unchanged. Now another one is coming in this month. Are they going to leave it unchanged? But looking at all the economic data we're seeing, the improvement we're seeing relatively stable exchange rate, which have supported some performance in some sector or the economy today. And also, we're seeing inflation declining after the rebate. That also said that yes, its price is also declining. If the figure, if you consider the figure, I was seeing that price that we bought since yesterday has declined. But if that the data telling us, it's also a good indication that yes, the economy is recovering, and when the economy is recovering, it's going somewhere. Therefore, for us to kind of boost the economy, for me, it's becoming important that we can have rate cut. But I believe that if you look at the purchasing manager index that were released by Central Bank, they mentioned that yes, that inflation is likely to raise its ugly head. They've seen it because they have the data they are playing with. And if that is in the case, they might not, because we saw another decline in the month of June to quickly rush into what cutting rate in this MPC meeting. Exactly. But naturally, before now, we have seen that other instruments in the economy, especially from fixed income market, from treasury bill, have been declining to show that yes, it's a pointer that we should have a rate cut. But because I believe that they are still going to watch, will inflation start bringing up any moment from now, they might start also to leave rate on change. But none of us, both investors, analysts, or traders, are expecting rate hike from this meeting. Because we're not expecting rate hike, it's good that yes, if they do cut, kind of reduce, that would be good for the economy. Investors or the Nigerian economy will have access to cheaper funds that will go to drive the whole employment, to drive expansion of business, everything, which is good. But I believe that they know the kind of figure they are seeing for inflation. If what we saw is what they are seeing, I should expect to go to a cut. Unless there's nothing there, because if you look at that, purchasing manager index for the month of June, it tells you that yes, CBN saying that yes, most of these costs are not being passed toward to consumer. But not thinking that investors should bear in mind, which I said one of the fora like this, that if we're expecting some sector or some inflation to come back, there are some industry that even when there's inflation, those managers can equally pass this high cost toward to consumer. And because they are running essential services and consumers are still buying, to make profit and post a better number at the end of the day that will drive their price.
Exactly. Yes, people already think that price let me butt you in here, Ambrose. For you, what would you suggest? Because a lot of analysts, economists like you and I are already saying one or two things concerning the meeting. Some are saying they are expecting a cut. Some are saying they are expecting a hold. While some are saying they are expecting maybe it will just be maintained. But for you, what will you suggest at this point in time, based on what you have been able to rally around for us to understand concerning the market today?
Ideally, in a normal circumstance, after we have seen inflation decline for 30 consecutive times, we could expect a cut. But I said that in the last report that was released for the purchasing manager index, there's a kind of statement made that most of these costs are still being held or being brought by the corporate bodies. They've not released to the public. If they do that, that means inflation will start going up again. But for now, ideally, looking at the decline, we should expect a cut in this meeting. A cut should be the way to drive the economy, because if the government and also are trying to achieve 4% economic growth in 2025, you need cheaper funds for people to have access to drive activity. It's activity that will produce a fantastic work, GDP. If costs are high, people are not taking money to expand their business, they're not employing people, all this 4% GDP will not be realized. It will be on a paper or just like what I'm saying. If you want to achieve it, you should make the environment conducive, provide cheaper funds for people to expand, and that's what is expected. But because there's already a kind of a clause or a kind of a signal, I'm expecting that they will hold rate for this meeting. Exactly. If we see another decline in July and August, then the one that will come for the month of September before the last one in November will expected to cut, and also that will not usher in the last quarter of the year with good direction. Because if you cut and also in September, that means the last quarter of the year and 2026 will be a year we're also going to see another expansion in economic activities. But if they do right now, it's also a welcome development. I believe because of the statement and also the body language of the CBN governor, they might not also cut rate in this meeting. But I believe even though they leave rate unchanged, it's good for the market and also the economy. But we expect that as we are seeing slowdown, in inflation, that will support not to have to release funds for people to do business that will drive the expected GDP or projected GDP by the government and also by the World Bank.
Now, let's quickly link this to the market itself. We have seen today market coming out also very bullish. And the last 4 days, I've seen a bullish outing on the market. So if CBN went ahead to have a cut, that means we are going to be enjoying a very robust market sensation going forward. But for others who also believe that because of inflation issues, we should also be very, very cautious to advise CBN. So what's your take? For the market, they're expecting it to cut so that it can enhance, their power, their purchasing power, and the rest of them for shares to go up. But for the ordinary Nigerians who the CBN so caring for in terms of inflation, they also want to maintain a steady, position. So what do you think would be on a middle ground, or which side are you on this?
On this issue, because I'm a market player,
exactly. That's why I put the question to you.
Because I'm a market player, I would like them to cut the rate so that we'll see circular flow from fund leaving a fixed income market to equity, so that company can come to raise fund and expand the economy. And also businessmen in Nigeria, entrepreneurs will have access to a cheaper fund to expand their business and engage more. That means it will work creating employment for Nigeria. If we have access to cheaper fund and I want to expand my business, I need people to work for me. But if cost of fund is high, I will always be downsizing, closing my business so that I can manage what I have. But if I have access to cheaper fund, that will fuel the economy. And as I said, we need to reduce the cost of funds so that we can oil this economy and achieve our GDP forecast by the government and also by the World Bank. But one thing is that as a market player, I would like to cut rate, to support the market and also support the economy.
Very interesting perspective from you. So, Ambrose, many of us out there are also looking at what CBN would do 21st and 22nd of July, whether they are going for cut, whether they are going for hold, or whether they are going for increasement or to increase it. But what is very, very pertinent is that from the last MPC meeting, CBN gave one particular reason. They said they saw a reduction in PMS price, and that's why they went for to hold on. But right now, we have seen a juggle of going up and going down of a PMS price between June and now. So do you think they will also come with the excuse of PMS price going down or making a moderate before they can make their decision for Monday and Tuesday?
Actually, if CBN is using data, if you look at the crude oil price in the international market, it has been stable a bit below our benchmark. That means crude oil is cheaper down. But for me, and also don't forget that Dangote oil refinery also cut fuel prices almost like 2 times after the meeting till now. On that, consider the stability around 860 in some places, 800 highest about 890. That is stability. If you can see that, for me, that is no reason for them to really want to hold again. That means we have seen stability in PML, which is a fuel. For me, it's a good one. But my own case or my way I'm looking at that, they are looking at inflation. But if really they want to take the bull by the horn, they can go ahead and cut rate so that this economy in this second half of the year will start bubbling to usher us into a stronger 2026 at the end of the day. Because I believe that if you want to achieve this figure of GDP, as we speak, like I said earlier, no data for Q1, Q2 as we speak now. Let's make the environment kind of conducive and attractive for investment and for business to expand. That also, don't look at using an interest rate to attract foreign investors. No, foreign investors see your economy is doing well, they will come and invest, especially we are opening up new sectors where they can come with their long-term investors, not just a portfolio investor, hot money coming to buy stock. No, we are seeing that if we have a stable exchange rate, now interest rates are coming down, it will attract foreign investors to come and do direct investment in Nigeria, come and establish factory in all these goods that is kind of the Boko Haram of them are using as a hideout. Let's come and put big factory there. So for me, that is what we need to make the economy conducive to attract funds to come, not funds that are going to push stock up. No, funds that come and invest and engage Nigeria and expand the economy, because since we are identifying new sectors, we need investment in those sectors.
Very interesting. Ambrose, I hope to bring you back next week after the CBN MPC meeting on Monday and Tuesday, so that you can dissect their final decision, whether they are holding, whether they are cutting, or whether they are increasing. But thank you so much for your solution on today's discussion.
Thanks for having me. Thank you.